Hello there. Have you ever wondered about the due on sale clause? What triggers it? Today, I want to talk to you about that. My name's Miles Pitcher, and I'm the owner of Superior Lending. I'm a loan officer located here in Utah. But first, here's my contact info and my business card. I want to show you what rates are doing right now. This is an inverse chart. So as the chart moves down, rates are getting worse, rates are rising. And I've zoomed out this week to show you guys that all the way back here is March of 2020. This is how long it's been since we have been at these levels. You can see that rates are getting worse on us. They're still in the threes and the mid to low threes. So rates are great, but they definitely have got worse on us. And you can see all these triangles right here. These are spots where we have locked in our clients as soon as we can to protect them from the rates getting worse on them. Inflation, the Fed discontinuing purchasing mortgage-backed securities are all contributing to rates getting worse on it. All right, due on sale clause. What is it? So this is a provision that has been written into mortgages. What it is used for is when a property is sold or transferred, that can trigger the clause that means the mortgage is due, even if you're not at the end of your 30 years or 15 years. And it came about as a way of protecting lenders in a situation where, let's say, the Smiths owned their home and had an incredible interest rate of 2.75 on their home. And then market rates have risen up to where they were up 4 or 5%. In the past, some people have tried to sell their home and to give that mortgage, not give it to them, but wrap that mortgage to the new buyer so that they could continue paying it, the 2.75. These are called wraps that were done in the past, and they are not allowed to happen. So this is a clause in there to protect the lenders. Now, I have never heard of a lender calling a loan due. And that's usually the typical answer when a client says, "Hey, tell me about this due on sale clause." And most realtors or people say, "Oh, as long as you pay, you're fine. You won't have it called due." Well, today I want to show you the exact verbiage and location in the Fannie Mae and Freddie Mac seller servicer guides that give you the direction on what triggers a due on sale clause and what's allowed. So let's look at that. So first of all, just keep in mind that as you take out the mortgage, if you claim it's a primary residence, you sign a paper that says, "I am going to occupy this property for at least 12 months, owner occupied." If it's an investment property, obviously that statement's not there. But just keep in mind that agreement that you have made about the occupancy, because that will apply to the rules here. So here's the actual location, and I will put a link in the description here. They'll take you straight to this, where there are allowable exemptions due to the type of transfer. This is Fannie Mae. Freddie Mac is very, very similar. We'll key in on Fannie Mae's. So trust transfers, inter vivos trust transfers, it'll go through and tell you exactly what's allowable. They are totally allowed as long as one of the original borrowers is a beneficiary. These transfers for spouses, grandparents, brothers, sisters, children, they are all allowed. The common question we get is, what about transferring the property to an LLC? So this is directly what it says from Fannie Mae. It is allowed as long as the LLC is controlled by the original borrower or the original borrower owns the majority interest in the LLC. And if the transfer results in a permitted change of occupancy to an investment property, such change does not violate the security instrument. For example, the 12-month occupancy requirement for a primary residence. So if you have lived in your home for 12 months as a primary residence and you decide to convert it to an investment property and move it to an LLC that you are the majority owner of or you control it, that is totally allowable. On an investment property that you buy and you sign the mortgage note individually and you close in your name, you can move this into an LLC. Since there is no owner occupancy requirement, you can do this no problem. Here is the spot where Freddie Mac addresses all these so that you can refer to them also. Now, these are the situations that are allowable and allow you to move your properties into LLCs or into a trust. If you are selling the property to someone else that's not related to you, then you're going to trigger the due on sale clause. We believe that every client has a right to every fee, every client, or to know what every fee means, and they should be presented options when they're shopping. Please let me know if you have any questions. Miles Pitcher with Superior Lending.